This is why, if as a retail investor, which is the average person, safe investments. Don't try to get rich overnight. Don't think that you're going to pick the next Amazon or Tesla or what have you. Those are few and far between. Play it safe, and you'll never have to worry about your money.
Wow, that's a mantra for today's podcast, I guess.
My recommendation to anyone who wants to start is, number one, don't try to do individual stock analysis. Stock analysis involves geopolitical events, business cycles, business analysis. There's so much involved in it. There are people that get paid hundreds of thousands of dollars a year to do that. So let them do it. Simple things. Building wealth means different things to different people. It's a relative term. What is wealth? And the way I look at wealth is, how much money do you make without working? So what's your income if you're not working?
What do you think are the best investment mediums in Canadian markets? Specifically in Canada, what do you think, best things to invest in? From let's go with the basic things to the top of the top of the ladder.
Namaskaram everyone, welcome to CLTV Podcast, where we bring to you great minds and ask them to speak so that we take our mind to its peak. In this episode, we have special guest Gary Peters, a financial well-being expert. Gary has over 30 years of experience running small businesses. Gary has also been angel investor and is active in stock market, focusing on technical analysis and derivatives. Gary loves teaching people about financial literacy, self-investing, and living a life free of financial stress. In this episode, he shares his valuable knowledge on how to achieve financial freedom and make smart financial decisions. We started with basics and ended up with the most complex investment options. Don't miss this chance to learn from one of the best. Please like, subscribe, and share this video, and also comment your questions if you have any. I've given ways to contact Gary in the description. Thanks a lot for tuning in. Thanks a lot for listening.
Hello, Gary. How are you?
I'm great. Pleasure to be here.
Wow, it's so amazing to have you on my podcast. It's my pleasure as well. So thank you so much for your time today. It means a lot to me because you're gonna teach me a lot of stuff for sure.
I'm glad to be here.
Awesome. So I've created an audio visual about you before the podcast. So I really want to get directly into it because I want to utilize most of your time today because I know you're busy. Having said that, please take us through your interest into financial industry. Why did you even get into this at first place?
Well, I've always been interested into finance. I had the opportunity when I was younger. My father was a school principal. He also had a side job, and my mother and he ran a travel agency on the side. So I've grown up with understanding the value of money and what's necessary in order to get ahead. So this is where we've been to get involved in money.
Oh, wow. I would say that's a lucky position to be because most of, regular population wouldn't be educated well when they were in their early age because of various things. Specifically, let's talk about myself. So I wasn't educated about money when I was young, but then it took time for me to go there. Still, I still have to travel a lot on this path of financial well-being. So having said that, sir, how can individuals, assess their financial well-being? How do you think they need to plan? The very basics of it. What is that you think is good to start with?
In my mind, building wealth and financial well-being is a state of mind. Personally, my approach is to look at your life as a business. You have your revenues, you have your expenses, and your ultimate goal is to build your net worth. So your revenue is your work or your job, and then it's about managing your money and building your net worth and focusing on how you build your net worth.
So talking about the net worth, so is it the skill sets which we have would enable the path towards building net worth, or like how exactly you think we would decide? Because I know having a job would give us salary, but then that enables us to pay the bills. So would this job thing, do you think that will enable us build wealth?
Okay, it's not just the job itself, it's the way in which you manage your money. Building wealth means different things to different people. It's a relative term. What is wealth? And the way I look at wealth is how much money do you make without working? So what's your income if you're not working? So that's how I personally define wealth. So your job is just a matter of generating revenue. Then you have your expenses. So how much of that can you put away that's generating money when you're not working?
Got it.
So, yeah. So, and it's not how much you make either in your job. You can make, there are people who have low income jobs who are wealthier under that definition than people that have very good paying jobs who are living paycheck to paycheck. So it all depends on how you manage your money and how much you put away, and it's structuring and managing your money.
That's the trouble, you see, like, because, we end up getting into situations where in which, okay, I have certain amount of money in my pocket. Okay, after paying the bills, I've left with this amount. And then I'll, because I've struggled hard to get that amount, I'll spend that to entertain myself. So we end up doing that kind of stuff, right? So because you brought it a really good point. So it has to be more like how well you utilize the money rather than spend it, right? So how do you think let's say someone who doesn't have much a big package in the job market, okay, we will cover various aspects as well, but let's focus more on the employee side of it, people who are employees. So how do you think a person with a median Canadian salary, let's say of 50K, how do you think that person should plan his or her financials so that they build some net worth and also pay their bills and run their family?
This is a matter of living within your means. The vast majority of people live well beyond their means. If by the end of the month, if you've run out of money, you're living beyond your means, you should be able to be putting a percentage of your income away into investments, whether you're investing in real estate, stocks, or what have you. You should be putting money away. Again, if you think of yourself as a business, the business has a revenue and the expenses. So the first thing the business is going to do is take a look at how much money do I have? What are my expenses? How do I reduce my expenses and increase my revenue? You look after the things you can control. One of the biggest things you can control is your expenses. Most people, if you're making $50,000 a year, you should be able to live and still have money left over. If all of that money is gone, you have to really consider, what are you spending your money on? If you're investing your money and you spend the money that you have, you're spending your future freedom. Money should be looked at as freedom. If you have money in the future, you can do whatever you want, right? You can retire, you can travel, based on how much money you have and how much money's coming in. So if you go out, and someone had mentioned this, I forgot who it was, but going out to Starbucks, for example, and spending $6 on a coffee or $5 on a coffee when you can go to McDonald's and buy a coffee for $1. Well, that's an extra $5 that you just spent on a coffee. $5 invested over 20 years is going to be 3 times the amount. So that's $15 that you just threw away. That's your future you're throwing away. So you have to consider, do you really want to spend that money? And this is why it's a mindset. If you want to develop wealth, you've got to think of money as a freedom. Am I willing to give away my freedom, my future freedom, to purchase this?
Wow, that's amazing. If you look at money as your freedom, then obviously no one would want to lose their freedom anyways, right? That's because freedom is something which everyone is looking forward for. That's what we are all doing in one or the other way. Wow, that's very deep. Amazing.
So it's actually quite simple. What would a business do? And if you think of yourself as a business is not going to go out and pay top dollar for a product when they can get it cheaper somewhere else. if they have a vehicle, they're going to buy the vehicle that costs the least to run their business. They're not going to go out and you're not going to see a delivery service buying a Maserati, right? Look, you're going to buy a cheap vehicle. So your life's the same way. And again, I think a lot of the people fall into the trap of wanting to show off their wealth or how much money they have. And this becomes a big problem. They're buying cars that are more expensive than they need. They're buying houses or computers or things much more than what's necessary. And these are things that are just going away in value. These are things they're not going to make you money. You're going to lose that money. So yeah, if you buy a car, how much do you want to lose? Because you're not going to make money on the car. You're going to lose money. So what's the purpose? Travel from point A to point B. So buy a car that serves your purpose. So these are things that you would take a look at if you consider yourself as a business and really think, is it worth spending the money?
I've never done that. You know why? That's something which is, what you said is very intriguing, because when you look at it, when you look yourself as a business and you operate like a business just with your own particular thought process towards the life, that's a unique approach, to be precise, because I consider myself and my business to be two different entities, or my job is two different. No, sorry. The job is your business in a way, right? Because it's giving you a salary as a payment. So leading life like a business, specifically the financial part of it, that's a unique approach, I would say. This is something first time I'm hearing. And that's amazing. So having said that, so let's get a little deeper into the investments part of it, because you've mentioned that a person with any amount of salary should be able to save or invest the amounts, the certain percentage based on their lifestyle. They should start investing, right? So talking about that, what do you think are the best investment mediums in Canadian markets? For specifically in Canada, what do you think, best things to invest in? From let's go with the basic things to the top of the top in the ladder.
It really depends. Again, it depends on how much money you are generating through your income. Everyone can invest in the stock market. That's easy. So if you're not making a lot of money, it's very easy to invest in the stock market. There are a lot of very good exchange-traded funds out there now that are paying 10% dividends. Great to invest in those, all the way up to real estate, if you can afford to invest in real estate. Real estate has generated more wealth in this country than any other method. So buying real estate.
Yeah.
So, which also poses its challenges. But for the average person, if you're not getting into real estate, getting into the stock market, opening up an account, utilizing your TFSA, utilizing your RRSP. My favorite is the TFSA, is the tax-free savings account. Everything made in there is all tax-free. So you're making 10% return on your money, compounded monthly. That's all tax-free.
Wow. Okay. I've heard about it, but okay. Let's now dig. We have two important points to discuss now. One, the first thing to start with is just TFSA account and the real estate. So there are other spectrums like mutual funds and other things involved, but let's focus on these two items. So regarding TFSA, sir, so take me through the process of investing into stock market through TFSA, and what is the best approach to optimize the benefits out of it? Like, let's say, what is the best approach to generate more wealth using the limitations of TFSA?
Okay, the TFSA, just so that we're clear on that, the TFSA is a vehicle. Okay? It's an area that you can place your money. It's like similar to an RSP. TFSA itself is not an investment. It's the vehicle. And anyone can open up an online brokerage, through Quest Trade or any other brokerage account. Banks have it. And you can, as little as $15, start buying an exchange-traded fund that's making you a 10% return. So you can put up to, I believe right now, it's approximately $102,000. Depending on how long you've been in the country and how long you've been working. If someone's lived here all their life and they haven't contributed anything to the TFSA, it's something like $100,000 that you can put into the TFSA. And every year, the government allows you to put in another few $1,000s to build it up. That's a great strategy. And if you haven't put into your TFSA, I recommend to people put into it as much as you can until you've maximized that, because it does grow fairly quickly. Okay, so that's the TFSA.
I understood the TFSA part of it. So, but then how do I decide which share I need to buy? So is it because there are times the value of the shares keep fluctuating, right? Like, is there any formula for best thing to invest? Because things have been really uncertain in our great nation so far. So as of now, to be precise. So in these troubled times, what is the best way to best things to buy through TFSA so that our income is optimized?
Okay, so you're talking about like stock picking or...
Yeah, exactly.
Okay. My recommendation to anyone who wants to start is, number one, don't try to do individual stock analysis. Stock analysis involves geopolitical events, business cycles, business analysis. There's so much involved in it. There are people that get paid hundreds of thousands of dollars a year to do that. So let them do it. Simple things. Invest in an index fund, something like SPY, which replicates the S&P 500, QQQ, which represents NASDAQ. There's ETFs, exchange-traded funds that are paying very high dividends, like, for example, call.to pays a 10% dividend, and that's a Canadian fund. You can go onto websites like Barchart or investing.com, and you can take a look and see what types of ETFs are available that you can buy into. And the nice thing about an exchange-traded fund is it's like a mutual fund, except you can sell it anytime you want. Buy and sell anytime you want. So,
yeah. So do you mind? Sorry. I'm just curious to understand what exactly is this? What happens in this? Why am I able to do that? Buy and sell anytime I want, because it's a fund, right?
Well, yeah, but that's the way exchange-traded funds are set up. They're very similar to a mutual fund. Okay. But a mutual fund, you're usually locked into it. You can't just take it out. If you do, there's fees. They're very expensive. Where they've created now exchange-traded funds, which are professionally managed funds. And those are very liquid. More liquid than a mutual fund. So if you need the money, you can go into your TFSA, put a sell order, sell your exchange-traded fund, deposit the money to your bank. It's that simple. It's very, very simple now to do these investing.
Beautiful. So based on your, now a little bit deeper, based on your experience in this country, what would you suggest? How do you think we need to gauge, which share values would increase? Something like, do you think the precious metals like silver, gold, do you think they carry any value, or do you think they will increase in the future, or they will reduce? Like, how do I develop this, thought process? How do you understand my question? Okay,
I think the precious metals, things like gold, gold and Bitcoin are in a different category.
Yeah. How is that a different category?
Okay, when you invest in something like SPY or the Qs or these ETFs, you're looking for dividends, you're looking for growth, you're looking to your portfolio to increase in wealth. Gold, on the other hand, is used as a more of an insurance policy and store of value. If you're going to save money, if you put money into the bank, it's going to lose value. Yeah. Right? We have inflation. We have a lot of inflation lately, and it doesn't seem like that's going to go away anytime soon. So if you're just saving, having gold is a great asset to have. You can always sell gold, and generally if you hang on to it, it goes up quite substantially.
Yeah.
And it's actually been one of the better classes of investments lately.
Okay.
So that's something you would have as an insurance policy, but gold doesn't make you money. You get no dividends on gold. You're not going to be trading gold. It's expensive. There's the amount that you pay for it as opposed to what you sell it for. There's a spread. So it's nothing that you're going to use for an investment purpose per se. It's something to hold on to long term, and it's a protection against the fall of the dollar. That's consider gold and silver as your insurance policy for your cash.
Makes sense.
For your investments are what's going to grow your wealth.
So that's amazing to know. So let's say if times are uncertain, it's better to put the money in gold and other precious metals. Can I take it like that?
Well, that's very often what happens. If you believe that we're going to be in a severe recession or depression, then absolutely. That's why you put a percentage of your portfolio in gold. I wouldn't transfer out of your investments to go into gold unless you see something catastrophic happening. But you should have some on the side, maybe 5 or 10% of your portfolio being held in gold and silver. You can actually buy exchange-traded funds for gold. It's called GLD. So it's not gold. It's what they call a paper gold. So on paper, you have the value of gold on that exchange-traded fund. So you don't have to buy physical gold and buy a safe and put it in your house.
Yeah. Makes sense. So what do you think I've got one more question after you revealed that the things could go wrong in the stock market. So how do I judge when the things are going wrong? How does one analyze the market and move to the gold, or vice versa? Like, okay, once market is good, they can move out of the gold and put that in investments. You understand my question? So how do I gauge the market in Canada specifically?
Yeah, and this is structuring your portfolio. I wouldn't consider so much buying and selling gold. Buy a little bit of gold or a gold ETF, have that there. Don't touch it. Forget about it.
Okay.
So now you're asking about timing the market as far as when to buy and
when to sell and others.
That's very tough. Nobody has a crystal ball. You don't know when the market's going to go up. You don't know when it's going to go down. You don't know when a war is going to break out. You don't know when a world leader is going to say something that's going to have a negative effect on the markets for a period of time. Over the long term, your investments are going to go up if you're invested in quality stocks. If you're invested in funds, they will always eventually go up. Don't worry about them going down. As a matter of fact, when they go down, make sure you have cash on hand. So don't invest 100%. Leave some, because the stock market will have a pullback. And that's when you can buy if you want to follow the market at all. Wait for it to pull back, buy some more, and then when it goes back up, sell what you bought, take your profits, and now you have cash again for the next time it drops. But your core investments, if you're new to investing, put them in. Leave them. Don't touch them. That would be my best advice.
Thank you. Okay, that's amazing. So, and I want to move to real estate, but before I do, I've got one last question regarding the stocks. So, what do you think are the common mistakes done by the first-time investor into someone who's investing in stocks, irrespective of the nation? It happens in USA, it could happen in India or Canada or any other nation for that matter. So, what do you think is the first-timer mistakes any stock investor would do?
Emotion. Emotion is the number one problem. When people put money into the stock market and they see it going down, their first reaction is to take it out. There's a whole cycle on that where people get desperate and they start selling all of their stocks. And when they do, the astute investor is buying those stocks because they know it's going to be going up. They're buying a bargain. You really have to keep emotion out of it. A prime example, and I know you had mentioned this in some of our correspondence, was the recent trade wars.
Yeah,
with Canada and the U.S. Well, if you looked on the media, everyone was all excited and concerned about how bad this was. But if we looked at the markets, they're there wasn't a lot of movement in the markets. It dropped maybe 2.5% in the stock market. So everyone knows when the trade war, it's not going to be good for either side. So no one expected a trade war, even if tariffs did come in, they're going to be short-lived. All right, they're negotiating tools. So the markets really didn't respond heavily to the tariff issue. They didn't see that as a big deal going forward. So again, if you keep emotion out of it, you've got to think rationally,
Okay.
And the most rational way of thinking when you're investing in the stock market is if you've invested in quality stocks, they're going to go up. They're not going to go down. So if they do come down, the stock market takes big swings, way up and then way down. Ignore them. If you're investing for the long term, put your money in, leave it alone. That's the best advice. And if you're a first-time investor, put your money in, trust the fact that you've made the right decision on the stock that you bought. Sure, it may be dropping now, but it will go back up. And if you just look at a chart over the long term, it goes way up and goes way down. And after it goes way down, it comes right back up. So don't worry about it when it drops.
Amazing. So as I'll just summarize everything regarding the stocks before we get into real estate part. So basically, the first-time investor should not ride on their emotions when they're investing in the stocks, so that they don't do mistakes of selling it when things are falling down. And they always invest in the quality stocks so that you are safe and your investments are safe. If things are really going bad, put them in the precious metals so that acts as your insurance. And ETFs play a major role. So have a look around them and see what is the best ETF for you. And always use TFSA to invest into the stock so that you can withdraw money if you're in need of. So that's basically better than any bank interest rate. Amazing. Thank you so much for the quick knowledge pill for stocks. So let's get into the real estate part. That's the most interesting because it's really volatile these days. Previously, until a year or two ago, it was a fantastic place to be for any investor. But now things are going everywhere. We have a reduction in the population. We have, the condo market is pretty. It has humongous supply of the housing, but then things are still waiting on. The builders are still waiting to sell them out. So what do you think is the future of real estate in perspective of a financial advisor?
Okay, full disclosure, I'm not an expert in the real estate.
Just your opinion.
Now, as I said, more wealth has been created in the real estate market than any other market. Where it's going, housing prices are going to continue to go up. Again, like you said, with the condo market, I think one of the challenges with the condo market is when expenses go up, your condo fees are also going up. So you don't have control over your expenses in a condo. You're at the mercy of the board of directors and whatever the expenses are for the condominium. So there's just challenges in everything. I know we take a look at office spaces now. People, that's home. That's going to the office. So changes in technology, changes in industry. What might be in now, a few years down the road, might be replaced by technology, where your facility is nobody wants it anymore. So it'd be difficult to rent out. So, you really have to take a look at all aspects of it, and dealing with a professional real estate agent, is absolutely necessary if you're going to start getting into any type of real estate. Even homes, when you buy a house and you think you're in a good area, and through the years now, they start developing a different area and everyone's moving to the other area, and your area is not so desirable. So houses will always go up in value.
Eventually, even though they fall down now, they would something like the stocks. Even though the stocks fall, we'll hanging on to them would increase their value in the future the same way, because people have to live somewhere, right? So obviously, houses is house, particularly, or any residential unit for that matter, is always valuable because people have to live somewhere. That makes a lot of sense. So, but then I've got, so what is the amount of the financial, proportion of the investment? Let's say, what percentage of money should be put into real estate for any regular investor?
Well, that's a really tough question.
Sorry.
Well, because it all depends on what your objective is. If you want to start getting into real estate and buying houses in order to rent out, what is your overall objective? If you just want to capitalize on some of the benefits of the real estate market, there's what's called a REIT, a real estate investment trust, that you can invest in. So through the stock market, you can actually get exposure to the real estate market as well without having to go out and start buying houses. If you buy a house, obviously you have the benefits of someone else paying for your expense.
That's interesting. What you mentioned, that through stock market, how are you able to invest in the real estate? Do you mind taking me through that part?
Yes, an investment called a REIT, Real Estate Investment Trust. So you can buy into that, and they buy, apartment buildings or build condos or what have you, and you share a little bit of those profits.
So the REITs are part of the stock market. I wasn't aware of that part of it. I thought REITs exist separate to the stock market.
Well, they're a fund that you can buy in the stock market on the stock exchange. They're like
seeing how illiterate I am with the financial industry.
No, there's pretty well everything that you can invest in. Then you can get into options trading and derivatives, and you can even invest into what the interest rate is going to be. So the stock market and derivatives markets are huge, and bond markets are huge. There's so many different avenues that you can go to. But again, that's getting that would be a whole other podcast.
Yes, I would want to sit with you. I would want to dig deeper into the stock market so that we understand it more. Now let's get to the nuances of creating a comprehensive financial plan, so that there is a bit of risk, there is a bit of the protectiveness, the defensive mode also activated. So give me how can one plan it properly with whatever amount they have?
Okay, so balancing growth with risk is diversification. So invest in the Canadian market. To be balanced, you want to be in different sectors. You want to make sure you have your funds that are going to grow. So you might be your index funds. You're going to have your funds that are going to give monthly dividends. So they could be good dividend ETFs. If you can put your money, little bits of money, into all the different sectors and index funds, you really reduced your risk. And if you're buying quality stocks, you really don't, there's not a lot of risk involved over the long term. So again, this is a matter of setting your priorities. And this goes right back to the beginning of running yourself like a business. What is it you want to achieve? And what steps do you need to take in order to get there? And, there's many different things you can do. If you take a look, do I have enough money coming in? Am I spending too much money? Can I reduce it to put more money away? So creating your goals, it's a matter, it's just sitting down and saying, what do I want to achieve? And then setting the plan to achieve that. Does that make sense?
Well, yeah, of course. I'm just thinking because, the problem comes as with the controlling the emotion, which I think what I've said makes a lot of sense when you're able to create an objective for yourself. That's what you're trying to say, right? So once you know what you want, then you'll act on it. Either you can select any kind of investment platform. It could be stocks, it could be real estate, or you could actually distribute your investment into various sectors and also grow everything together, and also have certain insurances like having investments in gold and silver. So basically, you have to diversify everything so that you do a balanced risk. That's what you said. Amazing.
And consider this too: if you put $1,000 a month away, and you put that away for 10 years, every dollar you put away is going to be worth about 1.7, so $1.70. Now, if you put $1,000 away and waited for 20 years, this is why doing it sooner is better. Well, that turns into $3. So every dollar is $3. So after 20 years, $1,000 a month at 10% reinvested is going to get you a total of about $750,000 after 20 years. So when you take a look at what do I want to achieve, then you take a look at what do I have to put away in order to get that. Then you just adjust your life accordingly. If you don't have enough money, what do you do to get more money? You take a second job, and again, it's personal preference. Are people willing to do that? You have to make a decision if you want to create wealth for yourself and you want to have a certain amount of money by a certain period of time. You have to balance that. And again, that's like running a business. What do I need to do to achieve my objective?
See, people usually don't end up running their lives like business, but just the financial part of it. Because if we do the business with our personal relations, things will be different altogether, right? But then, the financial part, I think it's amazing this thought process is very first time I'm hearing. Run your financial part, the investments, what you're investing into, what you're investing your time into, what you're investing, the amount which you have. These all things, think like business so that, we end up creating wealth by the end of it, right? That's I love that idea. I'm going to create a reel out of it and put it on the internet. Amazing.
The whole idea is you don't want financial stress in life. And it's very simple to put a little bit of money away. Because when you have a little bit of money put away, your perspective changes. If you have no money and things get a little tight, emotion takes over and you might not make the rational decisions. When you have a little bit of money put away, it's easier to navigate through more difficult times as well. So, doing this is, in my opinion, this is a very important thing that everyone should really be considering.
Beautiful, sir. So I've got two last questions for you. The first one of the last but one question is this. Do you think, are there any, hidden investment strategies within Canada which people usually overlook? For example, and this is my understanding, maybe correct me if I'm wrong. For example, investing in the farmlands, investing or buying a business in a rural areas or suburban areas of Canada. And this is I'm just giving an example. Like I might be wrong. So do you have any suggestions which are for the investors? These things are quite visible, but we tend to ignore them. But they happen to be the good investment options. Do you have any suggestions like that?
They used to always look for a good opportunity in business. Hidden things, I really don't know. That's a really tough question.
Sorry, I'm putting you on the spot.
No, that's quite all right. Investing in businesses and farmland, you really need to do your due diligence. If understand business, you don't want to get into a business that you don't fully understand.
Oh, okay.
You want to understand it, and you want to take a look at all the things that could go wrong. This is business 101, and I'm not sure if this is what you're asking, but if it's about business, you can look at a business and it might be a good idea to you, right? That doesn't matter. Is it a good idea to other people? And what could go wrong with that business? What are all the obstacles that you have? You have to do a full evaluation and due diligence before you start jumping into a business. And, always get counseling from other people, talk to other people. The worst thing you can do is think that you know what you're doing and that you're right about it. That'll set yourself up for failure. Talk to other people, get other perspectives. And that's like stocks too. Well, one recommendation I have for anyone for stocks is don't take a stock tip. That's the worst thing you can do. Just like a business where someone says, "Oh, this is a business that's going to do really well." Well, that's someone's opinion, but it doesn't necessarily make it true.
Makes sense. Because I guess it has to the idea of doing due diligence is that's the thing which matters, because you could hear news from everywhere. Like the best example, what you've quoted, the trade war between ourselves and our neighbors has not impacted much in the stock market. That's one such example, because when you look at the news, it's things appear to be scary. When you talk to people, things appear to be scary, but the businessmen who are investing they don't feel it to be scary. So yeah, so all that you have to be is aware. Yeah, sorry, go ahead. I'm just summarizing everything.
That touches on an important part. If you're going to do any type of investing, you don't listen to, you've got to be careful where your sources come from. Remember, with the news, the person watching the news is the product. So it's sensationalized, it's made to get attention, it's to get the viewer sucked into watching it. And when you're listening to the news, everything's in the rearview mirror. Everything's already happened, right? You listen to things that have already happened previously, and these big institutions, they already know about these things, and they've already taken action going forward. So if you're going to try to use the news and try to beat the market and try to do your investing that way, you're not going to win. You're not going to win against these big institutions. You're not going to win against these computers and algorithmic trading. And I'm not sure if you know what algorithmic trading is, but these are big computer systems that they have right at the stock exchange. And when the Federal Reserve gives out a report, these computers scan those reports. They hear see the key words that are in those reports, and they start trading before you could even get the report to your email. Wow. So you're not going to beat these people. This is why, if as a retail investor, which is the average person, safe investments. Don't try to get rich overnight. Don't think that you're going to pick the next Amazon or Tesla or what have you. But those are few and far between. Play it safe, and you'll never have to worry about your money.
Wow, that's a mantra for today's podcast, I guess. Play it safe. So, what about the IPOs? Like, how does one decide what is the best IPO to take and to be part of, like, and to buy?
Well, first of all, if you're going to get involved in a pre-IPO,
pre-IPO thing. Okay,
you've got to be an accredited investor. So I have done some of those investing as an angel investor. The vast majority of those do not work out. Okay, so yeah, you can invest in some of those for fun if you have a little bit of extra capital to do and you want to follow something and go along with it. But very, very risky to get into very new businesses. You don't know how they're going to go out. And you see a lot of these new companies that come out on the stock market and they start shooting up right away. And people get into it and then it drops and it never gets back there for years.
Yeah, so that happens.
Yeah, this is why it's so important. Good stocks. Go on sites like investing.com or Barchart. Take a look at what the professionals are doing. What are the healthy stocks? What have good capital behind them? What have a lot of money? What don't have a lot of debt? And understand that. Understand a little bit about fiscal and monetary policy. How is what government policy or what the central bank's doing? How is that going to affect your stocks? And this is getting a little bit more advanced as far as when to buy in. So if you have a little bit of cash and you see that, if the interest rates are high and, something like the CPI is high, the interest rates have come down, that's going to affect the balance. I think we're getting a little bit more advanced here, but okay. Well, see, investing.com is really good. You can see every day when the numbers are coming out, whether it's CPI numbers, job numbers, and things that are going to affect the markets, things that are going to affect individual stocks. So you have to understand if the interest rates are coming down, that's good for the stock market, right? Because most businesses run a debt, and that makes it more cost effective to run your business, increases your profits. Interest rates. Now, on gold, on the other hand, when interest rates come down, you could be weakening the dollar. So the value of gold is affected by that. Everything affects each other at different times. So, for example, interest rates going up, they may cause stocks to go up depending on your situation. They may cause stocks to go down depending on the economic situation. There is so much involved in that. Anyone who says, if you raise tariffs, this is going to be the result, they don't know what they're talking about. There is so many other factors that would be involved in something like that to try to make a determination.
Wonderful, Gary. Amazing information coming my way. And I really appreciate, the information the knowledge which you're sharing today. But then I'll let you go with one last question. Then, we will call this as a podcast. Sir, let's say if I'm at the age of 30 years, what should I do? What should be my strategy if I would want to retire within 15 years?
Okay, again, that's relative. It depends what you're going to be happy with. If you want to do well over 15 years, you can do that. It's a matter of, again, running your life as a business. You're going to create wealth for yourself. So it's going to be managing your expenses and your revenue. So your income, you're going to put at least 10 to 20% of your income away into investments. And then you're going to want to go out and get yourself either a part-time job or be able to do overtime and put 100% of that away into your investments. Okay. And think of it this way. When you're working 40 hours a week, at the end of the week, at the end of 40 hours, you might have, let's say, for example, you have $100 left over after all of your expenses. Well, if you work one day on a Saturday, even if you're only making $20 an hour, well, in one day for 8 hours, you've just made $160. So you've worked 40 hours for $100 after your expenses. So now you only work 8 hours and you over doubled your disposable income. All of that money goes into the investment. So you're going to need a side hustle. You can do it. You've got to work hard. 2 ways. You want to put as much money into your investments, which means you're not going to buy a brand new car. You're going to make sure you're not in debt. You don't have credit card debt. You're not living high on the hog. You're not going up to fancy restaurants, depending on your income. If you're going back to if you're making $50,000 a year, right? You're not going to live a very high lifestyle. You're managing those expenses, and if that's your focus, you can do it. Just don't expect a really high standard of living while you're getting there, but it will pay off in the end.
Wow. So what if I want to retire it, let's say plus 15, that is, let's say if I'm 30 and I would want to retire at 60. So do you think, do I still have to do the part-time jobs and side hustles, or will that enable me even better well-being when I turn 60?
Anytime you do a side hustle and you put extra money away, it's never a bad thing, right? Even if it gives yourself, you reward yourself and spend a little bit of it and put a little bit of it away. The longer you invest your money, it grows exponentially. Like I said, if you invest $1,000 over 10 years, it almost doubles. But if you do it over 20 years, it triples. So, the longer you invest your money, the greater the greater return you're going to get on it. So, yeah. Again, whether you want to retire quickly or over long, again, that all depends on what your objective is and how much you're willing to work in order to get there.
Amazing. So standard thing is the bare minimum thing to do is save 20% of your earnings, keep them aside, put them as your investments so that, you can enjoy your life once, that you have enough investments done. Awesome. Gary, thanks a lot for your time today. You've been my financial guru and for most of my audience as well. I really appreciate your time. I would want to discuss a lot more stuff because a lot of stuff is never taught in school. I'll coordinate with you and give you a call once you have some free time. Sit with you and try to come out with various topics for the podcast so that it helps everyone. It helps this nation, whoever is interested, they can learn from our podcast and lead a better life. That's what everyone wants.
Sure. Yeah, I'll be happy to join you again.
Amazing, sir. Thanks a lot for your time.
Thank you for having me.